Okay, well, let's see where you're finding some high conviction ideas and get into your pro picks. Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. All right, good. We are in the home stretch. Now I want to get into your pro picks. The first one is YETI Holdings. A lot of people will recognize this one. You might have an insulated cup that is made by YETI Holdings. It's up only 15% so far this year, but that's hard to gauge because we're in the middle of a sell-off. When did you first come to the YETI story? What do you like about it? What's to get excited about, with this kind of, what do you call it? Like cup maker?
Yeah. Well, that's not all they are.
Not all they are.
If anything,
seats and all kinds of fun stuff.
Yeah, but that's the perception. So that's why I think it's illustrative. I think of how we have this great slide that we showed our investors at our investor day in the fall, what the stock market thinks YETI is and what we think YETI is. And so, the origin story for us goes back a long, long time to Thule when they came public in 2016, 2015. I can't remember now. We always ask companies at the end of a meeting, like, who do you admire and why? And so YETI started coming up a lot from that team. And, the problem was they were growing, 20+% on the back of their cups business. So the multiple was really, really high. And so we basically, again, similar story to some of these other things that we've talked about today, 2022, big derating in the business. We spent the next 12 to 15 months going very, very deep on outside of cups, which have gone really well, $1 billion of revenue, 60% gross margins. What else do they do? And what we found was they had a lot of ambition to do other things, but they hadn't proven very much. So international was 4 or 5% of revenues at the time. And then, there was some talk of we could enter these other verticals. And what we really admired about YETI, people think investment banks are profitable, $1 million of revenue per employee. YETI is about the same.
What?
Yeah.
Wow.
They have chosen to contract manufacture a lot of their products. They earn very high margins on these products, and they don't buy, this is, again, stolen from Thule. They don't buy companies and they don't buy headcount. So, we went all the way back to, the private equity firm in New York that bought the business from the brothers who founded it. We studied sort of from their ownership to IPO, from IPO to more recent. And I actually relocated my family to France in the summer of 24 because international was supposed to be a big vertical for them in Germany, France, UK primarily. And we couldn't find much evidence of success. And we have access to both public and private data sets that were telling us you're saying a lot of Europe, but we're not actually seeing a lot of Europe. So they sent us 100 points of sale across those 3 countries. We visited over 50 ourselves to see we know what Dick's Sporting Good looks like. We know what Academy Sports look like. We know what the YETI of North America looks like. Is that what it looks like over there? And the answer was no. And so it was these tiny little barbecue shops that had a couple products here and there. So anyways, we did all this work. We shared it with the CEO of Thule at the time.
That's what you did for your family vacation?
No, this was only Sunday night to Thursday night, right? Okay. We have weekends and
okay.
But that was a big part of why we
do France very differently than most people.
Yeah, it was Lyon. It wasn't like Paris.
Okay.
But the point is, from first investment in Jan of 24, we'd probably been studying it for almost 2 years. And then post-investment, a lot of things materialized to help us take our weight. So we initially bought this business at a 1 or 2% weighting in the fund. It's now 4. And a big reason for that is they bought a bags business. They bought a powered cooler business. They actually bought a shaker bottle business for all those fitness enthusiasts that doesn't require an agitator to emulsify the powder with the liquid.
That's a big deal.
Yeah. So this product line diversification strategy that they're now on is way more evident, way more obvious. There'll probably be an investor day in May in Austin. And we think that the stock market has only recently started noticing all this stuff.
You mentioned the contract manufacturing. In a world of tariffs, how does that affect their margin profile?
That was 25. That was our life.
Done.
And our goal in 2025 was to never call a company and ask them about tariffs, because the reality is they don't know. So, you have to choose your your access very wisely. And sometimes you want to create mind share with these companies that you're not like everybody else. So when they have 44 people at the Morgan Stanley like consumer conference being like, what if, 44%, 22%, 18%, it might just be nice to be like, hey, how's the bag rollout going with this retail partner in this UK location, as opposed to like this short-term thing that the reality is nobody knows. So my view and our view back then was great companies are going to get killed by tariffs. And if it is a unilateral, if it's a unilateral cost that's going to get passed on, then actually being the low-cost provider is a win because you have less price that you need to take. And in Yeti's case, everybody knows how expensive their stuff is. Like nobody wakes up saying, I need a $50 cup or a $700 cooler, but you pay it.
Here we are, yeah.
You pay it.
Okay, your second pick is Royal Unibrew. This trades in Denmark. So Yeti you can buy in the US. Brewing and beverage. Just a quick beat. These names, the next two are international names. Are they challenging for Canadians to buy through their trading account?
Some broker platforms will be way easier for you to do that. But yes, the banks in their infinite lack of innovation wisdom are very challenging to buy international securities on. So I think these two would probably be challenging. So I apologize, but we have to bring our best ideas, not the best ideas that you could go and do yourself necessarily.
Well, let's learn about Royal Unibrew, brewing and beverage. And I think it's interesting. Well, it's flat over the past year. But to talk about brewing at a time where there's a big question around drinking and beer consumption and whether that is in a structural decline.
Yeah. So I would put this company in sort of like, in your brain, it's like beverage portfolio management. That's what they are. So they're a Pepsi bottler and distributor in certain parts of Europe. They've probably been one of the biggest beneficiaries within consumer because they don't have an ounce of production or consumption in the US. And so this is what we were saying to our investors or shareholders last year. Tariffs only matter if you're in the US. There's just this like wonderful ignorance that we can all have as international investors when you can find a business that makes stuff somewhere else and sells it somewhere else. And so this whole like tariff thing was like a big non-event for them. They did buy Amsterdam. That's sort of like the made in Toronto or Canada. In 2021, I believe, they bought Amsterdam from Jeff, who had bought it from the founder. And their goal is to be like a great like generator of cash on cash returns through operating beverage manufacturing. And so some things have happened in beer. I started my career in beer 20 years ago at Fidelity, which was awesome because some of this stuff just sticks with you. But like they all became marketing businesses. Mm-hmm. Like, and so this proliferation of, craft and now RTDs, it's never been easier to get your label on a can. The problem is, can you make it profitably and market it profitably and then distribute it profitably? And the answer is no. And so Unibrew for 5 years did no M&A. And then coming out of that sort of massive cost inflation period of 21 and 22, there were all these people with strong brands and like busted P&Ls. Mm. And so they started buying. And so right now, like Brewdog is the one in the UK that's being rumored as potentially for sale. This was like the first craft brewer of this like most recent era, because this stuff happens like every 20 years. Consolidation, fragmentation. Mm-hmm. And so they're in the running for that. But what we like about them is 20% cash on cash returns historically. They did buy some more capital intensive businesses that will probably mean this cycle they'll earn like 18, 17% cash on cash returns. And you're buying a very stable demand product.
These are stable.
Yeah. So I think if you look at a percent of they're actually thinking about renaming the company from Unibrew to something else because beer is less than 20% of their overall portfolio. So like these trends in alcohol that are affecting like Anheuser-Busch and Carlsberg and Heineken. And then the stock market goes, oh, well, what else is in that bucket? Unibrew. Mm-hmm. Except they don't have the same sized exposures. And so we learned this last year with tariffs. That was a great buying opportunity. We're now learning it with a lot of the trends in alcohol, which Unibrew is, not immune from, but I think as a portfolio manager, they've done a really good job constructing their portfolio to be on some of these very positive trends and avoiding these very negative trends. And we think today the cash, like the multiple, is very reasonable. So it's a large weight in our portfolio.
It's so interesting to contrast some of those beer drinkers. For a while, like a company called Celsius mm-hmm. was very hot. It has waffled, but it was like what did they do? Like calorie burning drink. And
thermogenically efficient, like energy drinks.
Yeah, I don't know about those, but what did you ever buy that?
No, we did a lot of work on it. Yeah. We had an intern present it to us in summer of 24. And, it probably would have been a good investment decision from them, but that's a good example of like, is this a trend or is it a business? Like we always come back to, is it a product or is it a company? And I think Celsius, they had gone through, in Guru in Canada was the same thing. Some of your listeners might know them better, but Guru actually got dropped by Pepsi when Pepsi backed Celsius. And so then Guru's press release said, we're internalizing distribution because we're big and we're important. But the reality was Pepsi said, you're too small. We don't care.
Yeah.
So here, we don't want to be your distributor anymore.
That's interesting. Fad versus a business. Yeah. I like that. Okay. Your final pick is Hypoport. A little bit more, maybe less fun than a drink or a cup maker, but a financing platform for what is like all kinds of financing, like mortgages.
Yeah. Mortgages, personal loans.
Personal loans. It's small cap, 620 million market cap in Germany, and it's been under pressure.
Yeah. I mean, making money is fun. So even though some of these companies don't do fun things, at least in their description, when you can earn multiples of your capital over reasonable periods of time, it's pretty fun. So Ronald, the founder, largest controlling shareholder, again, from first meeting to first dollar invested, 6 years. Wow. So fall of 22, Mansour and I, flew to Berlin because the stock was down 75%. And the reason it was down is because it had been valued like a software business forever, because they'd come up with a piece of software that was sold to banks, where they earn 1 basis point per year of duration of every mortgage originated in Germany on their platform. So think of it as like a true toll on the mortgage market in Germany. They're like 30-something% market share of all mortgage volumes in Germany today. It's a very, very tiny company. And Germany is the opposite of Canada. They have like over 1,000 banks. They have regional banks, they have investment banks, they have like co-op and savings banks. So hyper fragmented lending market, which is really good if you're a marketplace. And so the problem in 22 was like interest rates hadn't gone up in Germany for a really, really long time. So if you looked at like the 40-year chart of just like mortgage volume growth, mortgage value growth, it looked like a software company.
Yeah.
So it was trading at like 16 times sales or 12 times sales, something like that. Wow. Yeah. And so this press release goes out in September, which said, we're going to miss our guidance because volumes are soft and we're going to adjust our cost structure accordingly. And that last sentence was what led us there. We said, we don't think the stock's down 40% in a day. And it was, I think down from peak to trough 75. We just said, like, do people understand that this like mortgage software is 80% margin and might be hidden because these founders have always huge ambitions. Like they don't want to just digitize the mortgage market. They want to digitize like the real estate market and the insurance market. And so he had to kind of go through an adjustment of resizing his, what we called other bets. And he did that because his net worth declined 70%. He said, well, okay, if that's what I need to do, that's what I'll do. And so this year is going to be a record revenue, EBIT, and free cash flow for the business.
But the stock is
off a lot. We had a call with them again last week, Thursday. Mansour met them at a conference in the UK. And, he reiterated like the call to action for the entire company is profitability, don't sacrifice on growth, and show the market that, we have this like very dominant franchise that can earn really high returns on capital. And so we're looking at it and saying like, we're paying, 11 times for a business that probably is worth 20 times, but we don't underwrite multiple expansion. So even if it just stays at 11 times, we'll make 50% in 3 years.
Because their earnings will go up.
Correct. And so, they have an existing mortgage business, like human mortgage broking business. Then they have this software platform. And then we think the insurance business, which is the one the stock market doesn't like, is either going to get joint ventured or sold. And all of that cash flow is probably going to be used for a buyback, which you're buying back your best asset at like 2 times revenue. So that would be supported by us.
All right, Greg, it has been fascinating to hear about these stories and to learn a little bit more about you and your approach. Thanks so much for joining us.
Anytime.